It's 2022 and we're coming in with a bang on one of my first personal finance videos. And what I'm going to talk to you about today is how I manage my own money. I'm going to run through my monthly step-by-step plan that I execute on a monthly basis that enables me to effectively manage the money that I earn through my full-time job. If that is something you're looking into and you're looking to better manage your personal finances yourself, then please, if you don't already, subscribe to the channel down below. And then number one, the first thing I do is to pay my unavoidable expenditure. Things I'm talking about here are things such as mortgages, gym memberships, phone contracts, bills, utility bills, car leases. And the first thing that I will do from my paycheck is go and pay all of those bills. They're expenses that I have committed to and therefore are required to pay them for the term of the contract I entered with that supplier. Once I've paid off my unavoidable expenditure, then I will pay myself first. So with the money that I have left, I will put a proportion of my monthly income into savings accounts and into investments. For my savings account, I currently use a Monzo ISA where I will put an allocation into my Monzo ISA each month. Although the interest on that ISA is still particularly low, it is the cash that I need in case of a rainy day. Let's say the boiler broke and I need to buy a new one. Well, I will have some cash in there that will provide me with the funds up front should I require them. And then I will simply invest a proportion of my salary into my investments. Now this opens up a whole new can of worms. You have so much choice when it comes to investing and what you do with that investment. But our famous friend Warren Buffett often says the most sensible thing you can do is just to invest your salary into an index or an ETF type of fund. And for that reason, I don't want to blow my one opportunity with building my financial future. So I invest using Trading 212 into the Vanguard S&P 500 ETF on a monthly basis. The ticker symbol for that ETF is VUSA, and I will put an allocation of my salary into that each month. Over time, I'm hoping that will pay me dividends each quarter, will also generate capital gains growth. And I can promise you now, I've seen fantastic capital gains growth in the 2 years that I've been investing into the S&P 500 ETF. Then the third part of paying yourself is to invest into sunk funds. Let's say you have an expenditure that you know is going to occur in a year's time. Well, how can you plan for yourself to spend that expenditure? I'm going to use car insurance as an example here. You have two options when it comes to car insurance. You can pay in full or you can pay monthly. If you pay monthly, you're going to be paying the principal amount of that car insurance, but you're also going to be paying interest on the amount that you've borrowed throughout the year. If you pay in full, you will only be paying the amount that the finance is costing you. Therefore, you will not be paying interest on your insurance borrowings. By setting up a sunk fund, you can prepare in advance for that expenditure, and rather than paying monthly into the insurance company, you can pay monthly into yourself. I use Monzo Pots feature here to do this. I expect that my car insurance will be around £400 a year. Therefore, I simply put £35 a month into my Monzo pot so that when it comes to paying that car insurance, I've got the money in my bank account to pay for that car insurance. The real truth here is the only thing that is different between the two approaches is I'm paying myself versus paying a lender. If you get in a habit of using sunk funds for your one-off expenses that may happen on an annual basis, then it's going to enable you to reduce the unnecessary expenditure on interest rates. So I've done all my pay myself first, I then have my one-offs that I have to consider. And it may be something such as a car insurance. I will then allocate the money that I need based on what I would have saved through my sunk funds into the month so that I can effectively meet the requirement of paying off any one-off expenditure. And then finally, you are then left with the expenditure that is deemed to be disposable income. And it's completely up to you what you do with this income. You may use it on social events. You may use it to buy yourself, I don't know, a video game. You may use it to go for coffees with friends. You may use it to set up or spend your money on your YouTube channel and you're set for your YouTube channel. Whatever it is, that money is there for you. You now have a figure that is available to you so that you can be sure that you are not overspending on or disposable income. Once I've spent my disposable income, if I do then still have any amount left, then I would simply transfer it into a savings account, or maybe even still invest further amounts of money into the stock market. And it's this effective level of money management, which is typically very simple, can make sure you are well on top of your finances. I hope you found that useful. That is all from me today. I'll see you all again soon. Goodbye.